Hey, everybody. Welcome back to another episode of the Nailed It podcast. I think this is episode number 17. There's Nailed It. That's our podcast that we're on. I'm joined here by two amazing ladies that I had the privilege of meeting, I think, last year. Jen Perez, Valerie Gantz. Jans. Same thing.
You should really know your guests that you have on the podcast.
I do minimal research for the podcast, and the reason why is I want it to feel like I'm just meeting these people for the first time, so that it comes off like more authentic. Like I had Tommy on the podcast.
Do you know his last name?
Money. T Money. So that was their company. Their company is the Owner Finance Company. I just call them the Owner Finance Chicks.
The girls.
I think that y'all would really y'all should hashtag Owner Finance Chicks.
It's not a bad idea.
I think that that's like so cool. I want my two daughters to be able to grow up and do something other than get like a 9-to-5er that is working someone else's goals and dreams. I know that y'all, the reason why I wanted y'all on the podcast was because I do think you're nailing it in social media. I see constant closings. I see tons of activity coming out of what y'all are doing. And I think that y'all are doing something awesome because you're helping other people that could not have home ownership. So it's kind of like a double whammy for success. Not only are you getting successful, but you're helping someone else achieve their goals and dreams. And I want to thank Steve Davis with Total Wealth Academy for sponsoring and hosting this studio for us. All right, I'm going to take it to you. Tell me, give me the background before y'all started this. What were you doing?
Okay, so we started in oil and gas. That's where we met.
O&G.
O&G.
Where at?
In here in Houston.
Company.
I was working for JA Oilfield selling downhole tools. So everything above the bit that you use to drill a hole. And she was working with people.
I worked on two sides. With rat hole drilling was where we originally met. And that's basically the first 120 feet of the well. I sold tools for that. And then I moved into consultants.
How did y'all meet from two different companies?
We actually met through a mutual customer that we had. And
Sweet.
We were both, worked with him for a while, and he was like, I think you two should meet each other. And we just went to happy hour one day, and he was like, I think y'all totally get along, and we did. And then from there, we wound up figuring out that at that time we had multiple of the same customers, and we were both visiting rig sites at that time. So we were like, hey, why don't we just drive out to our customers together and save, gas time. Way better being on the road with somebody else than yourself. So
y'all weren't competing because you do everything above a certain height and she does everything below.
Mm-hmm. Yeah.
Wow.
So we needed to talk to the same person within the company, but yeah, we weren't selling the same things.
So what was the success like there selling the O&G tools?
It was hard. It was when we met is when
the market was going down.
It just crashed. And so I started, it was $100 a barrel. And when we were hitting the roads, it was quickly dropping into the 50s and 40s. So it was difficult. We managed, of course, because we teamed up, we were saving money on our hotel expenses and travel. So we kept our jobs. We did well. We ended up leaving because we spent so much time on the road. She would read books to me. We knew we wanted to start our own company. So she started reading Section 8 books and foreclosure books and whatever we could find. We would run out of service once we hit,
Backwoods, Louisiana. Or West Texas.
Okay.
You only have cell phone service for so long. So,
So while y'all were driving, y'all would just be reading out loud.
Mm-hmm.
That's so awesome.
And we would talk about wanting to start our own company and why, and just everything under this. You really get to know someone.
You really get to know someone.
That much time.
I would tell people that a road trip, if in the beginning of a relationship, a road trip is the number one thing that you can do. You find out everything about somebody past 3 hours in a car. Mm-hmm. Yeah. 2 hours, anyone can fake it for 2 hours.
Yeah.
But you need to find out, you need to go just long enough where someone has to go to the restroom and it's not a Buc-ee's.
Yeah.
Then you find out everything you need to know about the partner.
I would say to add to that, it would also need to be with no service.
Ooh, that's good.
That's why we were reading.
Then you like when things get quiet and silent and you like don't have music and you can't even use your GPS because you don't really know where you are. Like that's when stuff really goes down.
Yeah. Okay. So y'all were reading the books, and then when did it, like, how did it come about? Hey, we're going to go into real estate. We're going to quit our jobs.
So we started just trying to figure out what the least barrier to entry would be. And we started attending wholesaling events and just networking events wherever we could. We got on Meetup and Facebook and anywhere we could find, people were gathering, and ended up meeting Cole Fulkerson. He actually was kind of the start of inviting us to one of his breakfasts where we ended up meeting our partner, Mark, who we're partners with now. We got to know him. We continued to attend events like Jet Lending, just kind of get our name out there. Our cards were pretty basic. It just really had our name. We started a company together, knew we wanted to start investing or at least learning how to invest. And that's when we met Mark, our partner. And we met him at a wholesaling breakfast that Cole had invited us to. And we ended up networking with him at a few more events, and he brought this idea to us. He's been an investor for, over 25 years, and he was looking for something that would suit him. He didn't want to be a landlord anymore. He didn't want to deal with all the headaches of managing his properties, and he had this concept and discussed it with us, and that's kind of where it started.
And then what was the concept that is now what it is?
Well, so our partner, Mark, he had, the basics behind the concept of, like she said, really wanting to do something directed toward the investor, but also there's such a large group of people out there who can't qualify for traditional housing. And he did a lot of rental properties. He had a lot of renters that, wanted to buy. And so he just put the whole idea together of how he wanted it to work. And he's really more of like the creative idea side, and he really needed some people to work with who could bring it all to fruition, I guess, and figure out like, okay, how are we really going to take this from an idea to a concept, on paper that can run.
So good partnerships are developed when someone has a problem and they see someone else that can solve that problem, and then they can make a partnership. So what problem did he see y'all two solving?
Just like being able to actually make it come to fruition. Like, how do we take this idea and put it on paper? Who are the people that need to be involved? Who do we need to contact? Just basically, how do you incorporate the idea to the day-to-day steps it would take to actually make a deal happen and put a deal together, from finding the buyers. And
so he needed y'all to find buyers?
Well, it's investors, it's buyers.
Buyers and investors, yeah.
And lenders.
So he needed us to, I guess really the biggest place it started was forming those relationships with realtors and talking to them about our program and how our program can help buyers. And getting the word mostly out there to realtors and brokers. That's really how we were able to connect with those buyers from the very get-go was, speaking to realtors and brokers who had those buyers at their fingertips already, may have already been working with certain buyers or, came across buyers throughout their time being a realtor. So really being able to focus on that, or brokers who work with lenders that, help people in our situations, but at the end of the day still weren't able to help those people. So, just giving another avenue of being able to give people an option to get into a house.
So the first couple months that you started, what's the biggest change? How long have you been doing it, first of all?
Almost a year and a half.
Year and a half.
Yeah.
So like the first 3 months. What was your biggest challenge?
Oh
and then today, what is your biggest challenge?
Well, for us, a lot of it was learning too.
Mm-hmm.
As we started the company, we were still brand new to real estate. So, we still had to learn all the things that on the lending side, on the underwriting side, challenges that our buyers faced, and how we could work with those people. So, and we started the company in November of 2019. We ended up coming into COVID, not too long after that, which thankfully created an opportunity for us. We ended up closing 45 deals our first year, and the bulk of that did come, from COVID. So a lot of those people who were purchasing homes, they lost their job, they had something changed in their financial situation, and we were another option. So there were some people who were a week from closing, and they re-pulled, some financials or their job for verification.
Right.
So we really came in handy for those people at that time. So it was definitely a blessing for the both of us. We were able to help them, and they were in a situation that met our criteria.
Yeah. As far as biggest challenges, I would definitely say for us, just learning more of the real estate side of things. I mean, we knew what a TREC contract was, but we did not know anything about the ins and outs of it, or, what everything on there meant. And so I think just a lot of the basic real estate stuff, terminology of things, and who the right person was we needed to speak to get something done or to find the answer to something. So I would definitely say that was our biggest challenge in the beginning, is just that learning curve for us. And I think biggest challenge now, I don't know. God, biggest challenge now. I would say we just started our marketing campaign for the very first time. Like, we hadn't done any marketing just a few weeks ago. And right now we are in the testing phase of figuring out who we should mostly be marketing to. Should it be directly to the end buyer? Should it continue to be realtors and brokers and lenders that we've partnered with? Or, just figuring out some of those marketing strategies and what really is best for us, or is it multiple? I would say that, thankfully over the last 3 months, when things have kind of slowed down because of the winter storm and whatnot, we were able to really get some of our internal things in place that we needed to get in place, as a CRM database, a transaction processing, a lot of those things internally that will help us grow and get to that next level. So we got all that done. We spent the last 3 months really, really focusing on that, working super closely with our loan servicer for taxes and escrows, and just getting all that processed out and streamlining everything. And so now I would say marketing right now is our biggest challenge, just in focusing on what the best route for marketing is going to be for the company.
Yeah. I think marketing for people is easy if you know what your audience is and know what your why is. I think one thing that because this is going to be shared, people are going to see it. What I'm going to say about them is something truthful and honest. During coronavirus, when you guys started this company, there was never one time that I met y'all where you didn't have a smile on your face. Y'all weren't happy. And the circumstances of what was going on never deterred. I always say that I have some people. I have one of my daughters, my middle daughter, has circumstantial happiness.
It's a middle child thing.
Yeah.
We got it going on.
Yeah. I think when you meet people who don't allow circumstances to dictate and define their happiness and joy, those are people that you want to learn from and partner with, or be around. And I think you guys bring that, which is why I wanted y'all on the podcast, because one, if your biggest challenge is marketing, I just solved one of your problems. This is almost like an infomercial. And you guys get to come on and basically educate. I don't know anything about what you do. And I've just been seeing it. And I have rental property. I want to, I'm in the same boat that a lot of people are. I want to maximize my efforts. And I also want to, I want the continuous cash flow. Right. And I think you guys are disruptors in an industry. I think right now, would you agree with this? Realtors are a dying breed.
I don't think they have to be. I don't know if they are or not personally, but I don't think they have to be. I mean, realtors, we value them very highly. We work extremely closely with realtors. We love that there's a personal aspect to it, just because I think it's important for our buyers, especially for us. Our buyers are using a non-traditional method of financing, and that makes a lot of people uncomfortable and scared. We work with a lot of foreign nationals, and they don't know how things are here in the U.S. So for us, we really like that one-on-one personal relationship with a realtor for everyone involved.
There's a difference between a realtor that's in a niche that really requires trust and they require someone else to work with them and represent them. And then there are, because you have to remember, there's like 55,000 realtors at HAR. If you pull a report, basically like 80% is done by 1,200 realtors. It's a very small number. That means that the remaining balance of those realtors are either it's a side hustle, or it's just kind of like, I got my real estate license so that I could buy my own property. Some people do that because they're doing that. And then there are, I just see a lot of people that they have no real direction. They want to help people find property and buy property, but they don't really have like, they struggle with the marketing piece. How do I bring in the leads? And I see that as like, man, that's where I think a company like EXP is coming in and really disrupting. You know, they built their own technology, they have their own platform, and it really helped. And you can see these massive brokerages just going like this, and EXP is just going like this. It's crazy.
I think another thing from our side of it with realtors is one thing we were talking about the other day at a little event that we went to was like, how many deals per year do realtors actually close? And
what did they say?
They said like 5 to 10, like the really good ones, like 5 to 10, which doesn't
shocking.
That was shocking for us. We were like, wow, like just for lack of our ignorance of not really knowing, we thought that number was higher, but it really made us see a certain perspective that, you know, realtors, they aren't necessarily closing a ton of deals. So they're not seeing a lot of the problems that we see, you know, closing a lot of deals. We're seeing things from a perspective where we're working with lenders and realtors and buyers closing a whole lot of deals. So we're getting a lot of that insight from closing so many deals and seeing consistencies and inconsistencies across the board. But when you're only closing a few deals a year, you don't see all those things. And some, like in the beginning, I think a lot of times we were like, why do realtors not understand this? Like, we don't get it. Like, we love our realtors and they know so much more than we know. But at the same time, there were certain things that we were like, why are they even questioning that? And how do they not know that? But it's because they don't have the opportunity to see it. Like, realtors don't get enough experience closing when they're only closing, you know, 5 to 10 deals a year when we're doing that in 1 month. So it's like, they just don't get the opportunity to see as much.
Yeah. I think if you're a realtor today and you're not defining your area in your market, then you're going to die. It's just there's too many of them. There's too many options of people who are actually like specializing in something. The biggest advice I was ever given, a guy named Jack Mize, he said, you'll never be successful at Curtis until you start saying no to everything else. And you only say yes to what you really want to do. And so that was when I was like, I don't want to be buying any more property in Quell Valley. And I don't want to be driving people around on nights and weekends. I just want to find high-end property in the Heights. And I just want to flip as many of those as I can. And when I started doing that, I was less distracted and more successful. I was getting my deals done faster. I was cashing checks faster. It's just, you rely on what you don't know always is your, like, that's your fear, right? You know what, I don't know what's behind door number 2, but door number 1's open and I see it. So I'm just going to stay on door number 1, right? But door number 2 could lead to like a whole world of infinite possibilities. So what y'all did by not knowing and still going forward is like opening door number 2, you know?
Yeah.
I don't know. I'm not afraid of what I don't know. I'll figure it out along the way. And I don't think a lot of people figure it out along the way.
Yeah. Well, back to one of the original questions you asked about, like, how did we get to that point of just deciding we wanted to move forward in real estate? We were both, I think, just so burnt out on oil and gas, and we had just never, I mean, I had never been successful at it to a point that I wanted to be, you know, like I did fine in it, but I don't think I was ever like that great at it. And I don't think I was ever like at a point in oil and gas that I would have liked to see myself. And those were really part of the biggest reasons that made us just be like, you know what? We love real estate. Like, we like it so much. It's so interesting. There's so much to learn. Like, we do it in our spare time. Why are we not moving forward with this, like, in our lives? Like, I think we were just at that middle point of like, okay, not necessarily happy over here, not necessarily hating it, like appreciative that we're still like doing okay, but like not at a point that it was something we really were as good as we could be at it, or really where we wanted to be with it.
So what was the moment that y'all said, okay, we're done?
We both got to points with the companies that we were at the time that was just like, is this really working? Are we really super happy with a lot of the things going on? And when we could say no, I think to both of those questions, it was a point where it was like, okay, then what are we doing?
Do you
like,
remember the day?
I remember the time frame, and we were both also going through some things in our personal lives that was like, okay, some things need to change. Like, it was
Change needed to happen.
We both needed change for a lot of reasons in a lot of different areas of our lives. And it was the beginning of 2019, and a lot of things had gone on for us both, like professionally and personally. And so it was like the first month that we were like, okay.
Was it Common Bond at the bar with Mark when we opened the LLC? Is that what it was?
That was later in the year, yeah. But I'm talking about when we decided that we were going to start doing real estate events.
Oh, yeah.
And like really getting into
mid
real
2019.
estate.
Oh no, I'm saying, what was the day where you said, I'm retiring. I'm getting out of corporate America and I'm going straight into real estate. I'm going to do.
Oh, that day.
Yeah, that was November
of 2019.
Yeah. Was it?
And then we closed our first deal January 31st of 2020.
Mm-hmm.
Yeah. What was it like to walk into your boss's office and be like,
it was
peace?
Really easy.
Yeah, that
you,
was.
You weren't scared?
We were both outside sales.
Yeah.
So, and we both didn't have an office for most of the time we were in oil and gas. So it wasn't, for me, it wasn't really that big of a deal of a transition, just because like at the time that I did that, I was already commission only in my oil and gas position. I was already like not working in an office. I was already making my own schedule. I was already doing those things. So really wasn't much of a transition for me to say that stuff.
And when you were making sales, I'm sure at the beginning it was probably like a 60, 90 day turnaround till your company got paid. Did y'all get commission when the company got paid, or did you get commission when you made the sale?
I was on salary.
I was both. I was like partly salary and partly commission.
Draw against?
Mm-hmm.
Okay. So would you get commissioned? Would you get paid when the company got paid? Because oil and gas went from like a 90-day credit line for most distributors to like these companies were not even paying for almost a year. I've got a buddy of mine who he's still got somebody that he's got like hundreds of thousands of dollars, and it's on like, it's just money's just trickling in.
Let's just say this. Sadly, a lot of salespeople in oil and gas, and maybe not even sales positions, others too, but a lot of people in oil and gas suffered being paid at the time and the amount that they were supposed to be, throughout all of it. But those years were really tough for oil and gas. I think oil and gas is a really tough industry. I think people did.
What's
their
harder,
best,
real estate or oil and gas?
Oil and gas.
That was cool. Okay, that was great. Okay. Way harder.
Yeah, I think so. But I don't know. It's different because we love real estate so much. Like, we just have always had a thing for it, So I don't know if maybe that's why it's not as hard.
Well, and when you're specializing in we said this at the beginning, but when you specialize in something that helps other people out and you also get to financially benefit from that, it makes way bigger difference.
It's extremely rewarding.
It is.
It's way different.
It is. I build these houses for people. That's my company, Urban Restoration. I build these houses for people custom now, right? I used to do it on my own. And a lot of people that I talk to are like, why do you build for other people? It's so hard. I hate it. They make change orders. Because I'm like, I get some kick off of walking through the property and seeing them like, you get to see it daily, and you know that you're building it for them, and then you're handing everything over to them, and they are like so excited and appreciative because they saw the entire process. Just like y'all are going through with the realtor and with the family or the person who couldn't have bought the property without you. They're getting to go through this whole process of where I didn't see it happening, and now it's all coming to the end. What is the one thing that you wish realtors knew about owner financing?
Well, actually, one thing that I was going to mention about just educating them about our program and letting them know that there is alternative financing available for their clients is we just started last month to ramp up our trainings again. So we had our first realtor training last month. It was great. We had a great turnout, and they ask a lot of great questions. And so I just can only imagine that there's so many more out there that could use our program that don't know about it. So we're going to try to be diligent in having these monthly trainings so that,
Where are they at
our corporate office. So
which is where?
In Stafford.
Address?
10707 Corporate Drive.
Okay. And if someone wants to go find out where the events are, how would they get in touch with y'all?
We post all of our events on our website, which is www.theownerfinancecompany.com, and on our Facebook at The Owner Finance Company.
Yes. And so y'all need to go and like, love, and share their posts.
Yes, like, love, and share. And that's where we'll post. We're working on some other programs for our buyers just to try to help them out, possibly with some lower down payments down the road. We have some investors that we're working on with to try to create some new programs. So stay tuned to our Facebook and our website. Any new programs we have or trainings we're holding will be on there.
So what's the current program? Like, if someone wants to get involved with y'all right now, what would they be looking at in terms of, let's say I wanted to sell one of my properties. What am I looking at for the buyer to bring to me?
So they would bring 15% down.
Okay.
We charge 5% fees on every transaction, and then we estimate their closing costs to be give or take 3%. So they would need to show proof of funds of 23%, a valid ID or passport from any country, and then our application filled out. Those are the only 3 requirements that we have to pre-approve our buyers.
I love what is it called? EIN, TIN?
I-10.
I-10.
Mm-hmm.
But
I love the I-10 buyer.
yeah, they're great.
We have a lot of them.
They're amazing.
Yeah, they're great.
Well, if you have anyone that wants to buy one in Missouri City,
So
let me know.
you, as a seller for you, what you would do in that instance is like for you building homes or any builders out there. We work with a lot of new construction builders.
I did, before I became a builder, I did 500 transactions just in single family.
Well,
Wow.
so what, as the
Like
seller?
I had 54 rental properties.
Oh my gosh.
Yeah.
That's a lot.
Yeah.
Well, if you had any more
I built a
rental
subdivision.
properties, that's insane.
And then I sold every single house because I bought this existing subdivision from, I can't remember what it was called. But anyway, they went out of business, and this bank in New York had this huge tape of like 16 properties. And I was able to afford 6 of them. So I was like, hey, look, if you'll sell these all to me for $75,000, I'll buy them. So I got 4 at 75 and I got 2 at 65. I sold all of them owner finance except for one. I kept as a rental for 6 years, and then I just sold that one 2 years ago. But I sold all of them owner finance, and I was able to sell them. Like the average price was like $135. I could sell for $145, $155.
yeah.
Yeah, I was able to
You
sell for way
scored.
more. Yeah.
You did good on those.
Yeah, you did
Yeah.
great on that.
And then in 3 years, I sold one of them twice, because one of them, it went into foreclosure because he was decapitated in a motorcycle accident. And we worked with his wife for 6 months waiting for some life insurance policy. The life insurance policy was then given to his mom because they weren't married. So it goes to the next of kin. So it was awful. It was
Sad.
awful. So we resold that property again. We gave the lady like $5,000 to move out. We gave her, and we assisted her finding something else, but she couldn't keep paying it. And so we sold it again. And owner finance, I made a ton of money on owner finance.
Yeah. So our program is a little bit different just from the investor perspective, the way
Okay.
that the owner financing works. So like you as a seller, if you wanted to use our program, just to sell, you could put an owner financing available sign in your yard, or whatever listing agent you use, say owner financing available. But you, in essence, as the seller, would be selling the property to either us, the owner finance company, or an investor that we work with, who, we have a whole group of pre-approved investors that we work with. And so for you as the seller, that's who your buyer would be, is our investor or the owner finance company. From there, they take over the contract, they do the closing at title.
Or I could just go and become one of your approved investors.
Correct.
Yeah.
And that, you could do both or either one, whichever. But in that case, the first closing is normal. Basically, for sellers, it's great because they are automatically working with highly qualified buyers. So they really have nothing to do with our end buyer. Neither does our investor. So they're directly dealing with the owner finance company only. So it's great. And then the owner finance company technically does the owner financing back to the end buyer.
And y'all service the note?
We do.
Awesome.
Mm-hmm. Well,
Awesome.
we use a third-party loan servicing company, but yes.
The one out of Dallas?
San Antonio.
August REI?
We use an RMLO, and they are out of Dallas.
Yeah.
Okay. So you use August REI?
No, we use SecureNet for our loan
SecureNet,
servicing,
okay.
and we use Texas Pride Lending for our MLO services.
Awesome.
Mm-hmm.
So,
Yeah, they're great.
They've been wonderful to work with.
Yeah. Brian has used August REI, and he hates it, and I don't like it either. I've been billed twice. So finally, Brian and Chelsea just started servicing their own notes.
It's a lot of work.
Yeah, it is.
Especially when it comes to the end of the year for taxes.
It's a lot of work.
We did it, half of it ourselves this year, so that was definitely a learning experience. But it's been wonderful to work with this loan servicer. He has all of our notes right now, and he does an amazing job communicating with our buyers and with us. We've really enjoyed working with him.
I just think that this is a part of the industry that no one talks about. And no one really because no one talks about it. You just don't know. And you hear all these things, like a ton of realtors hear these stuff like, which y'all aren't dealing with, but most realtors are like, oh, you can't wrap a note. Yes, you can. Like, you really think Chase is going to go and, they sold like 100 loans to this one investment, right? And they're saying, hey, this is what our discount rate is for all of these notes, and we want you to pay us this amount, and all these people are A's, and we have like this many B qualified people in this bundle, right? This was all what happened with the subprime mortgage. No one today is going to go and trigger a default on that note that's wrapped with all those other notes. It just because it's paying, it never is going to get triggered.
Right.
And we take care of that. So for the investor,
you do take care of it.
We pay the underlying mortgage notes for our investors. And another thing for sellers or just maybe landlords wanting to owner finance their properties, we also help market them. So we have a ton of buyers asking if we have our own inventory. We do have some properties that we own in our inventory, but generally speaking, they can pick any home on the MLS. But if you have a property that you'd like to owner finance, we can absolutely help put it on our Facebook, say it's available, just put the listing agent's contact on there and help it get sold.
And you guys get 5%.
We take 5%.
Of the 15% of the down payment.
No.
What, it's an addition to rolled into the back of the loan?
No, it's on top.
On top.
It's on top.
So I get 15%. You guys get 5%. And then there's an additional 3% in closing.
No.
Okay, explain that to me.
No. Okay, so you as the seller, you basically you're going to get whatever you would get selling it to any buyer. You're in essence selling it to our investor.
Right. I'm talking about from an investment in order to be an investor.
Okay. So to be an investor with our program, right now, most of our deals are 5% down. So basically, when our investors go to get the loans, their investment loans that they're getting, they put down a certain percentage, and the owner finance company brings a certain percentage that they're going to pay them after the close as well. So they basically have their own contract with the owner finance company. We pay them a certain percentage that's, handled up front. But their note with us, yes, we pay them a certain percentage for the property, and they bring a certain percentage that makes up that 20%.
Okay.
So you would get the 15%.
Yes.
Right.
And then we would take the 5%.
Yeah.
Okay.
And we also cover all the closing costs. So that would mean as an investor, you would come to the table, in essence, putting 5% down, and you guys have to cover your loan origination fee.
Okay. And so what does the investor need to do in order to be qualified with you?
Just contact us, and we basically kind of go through a little bit of a pre-approval. But I mean,
what are the qualifications?
just great credit score or good credit score. I mean,
How much
like,
capital?
Reserves, typically to do one deal, you would need at least 20% plus like 10,000. So of the purchase price of a home, we don't do any homes below 150. So 150 all the way up, you know, wherever you fit into that. But it's great for even first-time real estate investors who might only have, you know, 20, 30 grand saved up that they want to do something with. And then we pay our investors 9% a month for cash flow.
Now we're getting to the fun part.
Yeah.
So our
Cash
interest
flow.
rate to our end buyers is 9.9. So we keep 0.9 and we pay our investors the 9.
Okay. So if anybody's out there with a Roth and they've got some money and they want to park, I can co-lend with another Roth to y'all and do the deal and make 9% on my money, guaranteed for how many years?
30 years.
30 years.
30 years. Is there any prepayment? Can they refinance?
Yes, they
Yes.
can. Yeah.
At what year?
They can refi. They only have to hold the note for 18 months.
Okay.
And they can refi. If they do refi in less than 3 years, then we basically, I mean, our investor will always get their initial part back. So they'll get that back. They can either roll it into a new deal with us or cash out, whatever they'd like to do. And then if they do another deal with us, we pay the loan origination fee.
Is your biggest problem right now money to do the deals, realtors, or leads to, you know, finish the like to help somebody find one?
Well, we realtors and leads right now. So we can do, and that's part of like the marketing stuff that we're figuring out right now, is if we should do it directly to the end buyer, you know, if that should be the bulk of our marketing, or if the bulk of our marketing should be to brokers and realtors who can bring us all these buyers.
Do you want me to give you the answer?
Yes.
That's it. That was the answer.
Yeah.
Yeah. I mean, okay. It's a bigger challenge to educate a realtor. They already are being told owner finance is like, you know, you could get in so much trouble with an owner finance, right? There's so many issues because of the Dodd-Frank, and you're limited to this and you're limited to that. And these brokers they're fighting against a lot of the process. I'm over here telling somebody, hey, I'll owner finance. And I'm having to, I get an offer. Oh, we didn't know that you had an underlying mortgage. Oh, we didn't know that you had this or that. And so then I'm dealing with like a broker fighting against me. I think my personal opinion is the person with the most motivation is the person willing to jump through the most hoops. Their goal is finding a property. Open Door solves a problem. Their problem is they don't want to deal with someone from We Buy Ugly Houses coming in and giving them an offer, right? And then telling them all the things that are wrong, and then they've got to go through 5 postcards and blah, blah, blah. They want to go through Open Door. That makes the process simple. I log on. I give them my address. I answer a couple of simple questions. Boom. Within 5 minutes, I get an offer.
Yeah. No, we just right now mostly need, I'd say, realtors and buyers. Yeah.
And one thing we do is we do offer referral fees. So if you are a realtor on a deal and you're receiving a commission, we do not pay a referral fee for that. But if you refer another client to us, we do pay $1,000 for every referral that we get. And if it's an investor that you referred and they do multiple deals with us, you make your $1,000 on every deal that they do. So there is an incentive for brokers. You know, we do go speak at brokerages, and every realtor that they send us with a client that closes, they do receive the $1,000 referral fee.
Yeah, my idea would be to target areas of, target areas of town where you know that you're going to maximize your biggest return in the price points that you're looking at, where people are, might not qualify, and there might be some distress there. I would just circle that map and Facebook target people between the ages of 26 and 45 or whatever that is, and just start mass marketing owner finance. But I would put a lot of it in Spanish.
We do.
So we do.
Yeah, we do already. We have a Spanish speaking representative.
That's
and our
awesome.
notary and everything. We're definitely already in that market. We have our website, a page dedicated for Spanish speaking buyers and realtors and everything that we work with. And we work all over the state of Texas. So as far as like circling a map and something like that, we work with buyers all over the whole state. So
Yeah.
We're not particular to just any one area. In fact, we kind of do a lot of deals outside the city limits, out, in the Livingston area and just surrounding counties. I mean, there's
Our
buyers.
newest deals in Woodville.
Yeah, in Woodville.
Where's Woodville?
It's East Texas. It's pretty.
Yeah, it's in East
about
Texas.
2.5, 3 hours east.
Is
Texas.
it most of your clients are coming from outside of the area?
No, they're kind of everywhere.
They're
so we
everywhere.
have properties right now in Fort Bend, Montgomery, Liberty, Brazoria, Harris. Am I missing one?
This is amazing. So how
There's
much
6.
marketing are you doing outside of Houston?
Well, so we literally just started our marketing campaign 3 weeks ago. Like, we had never in the history of the company done any marketing
Zero.
outside
But
of
then
like
how did those people
Facebook.
find out about you? Just Facebook?
word, like
Word of mouth.
realtors and brokers that we worked with. They were working with buyers or know of buyers who can't qualify traditionally. And so that's where most of our buyers have come from is that. Or, our partner Mark, he works with a lot of different people throughout the industry. He did owner financing for a very long time on his own. So, he's got a wide network of people as well. So buyers from both, like that was mainly, I guess, has been where we've gotten our buyers.
Extremely blessed our first year.
Yeah, I would say y'all are about 6 months away from totally exploding. It just seems like the momentum.
Bring it on.
I like
The
the good
momentum.
questions.
I like the good. Yeah, we like that. Bring it on. Put it out in the universe. Let's get it.
No, there's no way. Your first year you did 45, right? And you had the world against you with the pandemic, and you still found a way to make it work.
It was amazing.
Yeah, and it's going to open back up, and a lot of those people are going to get jobs, but a lot of those people might be in areas where they.
I mean, for a lot of people, it's a multitude of reasons. It's credit. It's someone's going through a divorce and they, can't really go through underwriting.
They're 1099. That's a big one.
Self-employed is a
Low
big
credit
one.
score, because a lot of those people might get a job, but their credit scores, because they were delaying payments, it's going to take a couple of years to get through that system.
All the people who are on forbearance, that they're not going to be able to, go through traditional lending. So we do think over the next few months that there's going to be an influx in buyers and just people that we'd be able to help.
Well, I hope that this podcast gets to help you expand your business even further. I think that you guys have been killing it. I'm super
Thanks, Curtis.
excited for y'all.
Yeah, thanks for having us on.
Yeah, we appreciate that.
Yeah, no problem. Tell people once again how to find you.
So you can find us at our website, which is www.theownerfinancecompany.com, or our Facebook at The Owner Finance Company. And if you'd like to reach Valerie or I directly, our emails are Jen or Valerie at theownerfinancecompany.com.
Perfect.
Yeah, we're pretty easy to find, I think.
Yeah, I think
Isn't
so.
our name great?
Yeah.
The Owner Finance Company.
Yeah.
I love it. I can't
Anyone
believe it was
after us.
available.
Neither could
That's what we
we.
said.
Neither could we.
You know
couldn't
why?
believe it. Because it was meant to be.
Well, yeah, it's meant to be, but because it's the most overlooked part of real estate. That's what I think. And it's probably, like you said, it's an easy barrier to entry for people who only have $20,000-$30,000 that they want to
First
lend.
time real estate investors. It's
Right.
a great program.
Right. It's guaranteed. You guys are giving them 9% on their money.
And
Where
it's
can you
hands
make
off.
that?
So,
100%.
Super hands off. I mean, we do everything.
So we're
for our
kind of in the
investors.
middle. Yeah, we represent our investors with the lenders. So, especially for the ones who have done multiple deals, we have all of their files. So they really don't have to, do much legwork as far as turning things in. We're always CC'd on everything when we're working with our underwriters, just to make sure that we can make it an easy process for our investors. So
we do a lot of portfolio management as well. And our investors that we work with, if they would like our help with managing other, investments or whatever for them, like we will help with that. So just whatever we can to make it as hands-off. That was one of the goals of the company from the investment side, was just to make it as passive and hands-off for the investor as we could. That's what, our partner Mark, what he wanted. He's like, I'm an investor, I can do this and that, but I don't want to do the work for it. So that was one of his biggest goals, was just to be able to provide that to people.
That's awesome.
Yeah.
Hands off to y'all for figuring something out in a world of craziness.
Thank you.
Yeah, thanks.
Well, everybody, once again, this is the Owner Finance Company. You guys, we've been listening to another fun-filled, educational, and super inspirational podcast with Nailed It with Curtis Warden. That's me.
Nailed it.
Go Stros.
Nailed it.
Thanks, Curtis.